In this lecture, we will be examining a financial scandal known as the Black Friday Gold Conspiracy of 1869. Part of the background to the gold conspiracy was the election of Ulysses S. Grant as president in 1868. Under President Grant, big business interests enjoyed a significant degree of freedom from government intrusion. The period of the Grant administration was an especially favorable political climate for big business, and quite a few administration officials were accused of corruption. The era of the Civil War also served well big business interests in the Northeast and the Midwest, as government contracts for war supplies made many investors wealthy. Grant's administration also helped American corporations by preserving high protective tariffs, which made foreign imported goods more expensive. Many railroad companies during this time received federal subsidies in the form of loans and land grants and tariff exemptions on certain imports. Another backdrop to the Black Friday Gold Conspiracy of 1869 were changes in the U.S. monetary system. The National Banking Act of 1863 created a new national currency in the form of a paper banknote popularly called the greenback, which you can see depicted in the image. While the U.S. was not on an official gold standard, international trade was, and any company or individual investor had to use gold for most transactions. In addition, since the value of greenbacks varied widely, investors needed to trade in gold as a hedge against the devaluation of greenbacks. As the Civil War ended, creditors profited from this somewhat deflationary sequence of events in a time of currency shortages. Moreover, financial speculators benefited from inside trading information and from the refinancing of national bond issues, and they often paid their bond purchases with devalued greenbacks. In September 1869, two speculators, Jim Fisk and Jay Gould, conceived of a plan to make millions in fast profits by cornering the supply of gold in the United States. Through Abel Corbin, who's depicted here, a brother-in-law of the president, President Grant was persuaded by the argument that a temporary halt in the sale of gold by the U.S. Treasury was helpful to many Americans. This image shows the two principal creators of the Black Friday gold scheme, Jay Gould and James Big Jim Fisk. Gould became wealthy in speculation and through railroad corporations. Fisk became wealthy trading during the Civil War, though he lost a fortune speculating in stocks after the war. Both men saw a tempting opportunity with the scheme that they hatched together. Grant had been told by advisors that the sale of Treasury gold would help struggling American farmers by bringing an increase in the commodity price of wheat. Grant's naive willingness to go along allowed Fisk and Gould to buy a great deal of the supply of gold using legitimate transactions through intermediaries. The sudden spike in gold prices caught the interest of speculators, and almost immediately the price of gold skyrocketed due to a speculative bubble. Fisk and Gould also used gossip-mongering brokers as a way of getting people to believe this was the beginning of a long rise in the price of gold, when in fact they were artificially engineering a quick spike to make some fast cash. The scheme envisioned by Gould and Fisk caused an almost immediate 30% jump in the price of gold, and it simultaneously caused a drop in stock prices as investors rushed in to buy gold. This 1869 cartoon of the Black Friday gold conspiracy depicts Jay Gould on the left. The gold market is represented by bulls and bears in the cage. A bull is an investment metaphor for a buyer who believes a stock or commodity price will rise, while a bear typically represents a pessimistic buyer who believes prices will fall. Ulysses S. Grant, the president, is depicted in this cartoon carrying a bag full of gold to calm the markets. Some businessmen who needed gold coins in legitimate financial dealings became bankrupt on Black Friday due to the artificially high prices of gold. Other businessmen became bankrupt when creditors demanded to be paid in gold and they could not purchase enough gold to meet their obligations. Grant and his advisors finally understood what was happening, and Grant ordered the Treasury to sell gold, driving down the price. The federal government eventually broke the speculative bubble. However, this was far too late to prevent the damage done to many thousands of small investors. The American economy suffered from this financial chaos, and exports in particular suffered for several years. However, Gould and Fisk managed to avoid financial ruin, though Fisk would later be shot and killed just a few years later. This image is a photograph of the gold sales board in the New York Gold Room on September 24th of 1869 that shows the rapid fall in the price of gold. While markets eventually calmed following the efforts by the Treasury Department to break the speculative bubble in gold, this event, in the long run, heightened anxieties about American financial markets. The Black Friday gold scheme weakened support for so-called greenbacks, which were increasingly viewed with suspicion. As a result of the panic, American stock prices had plummeted, as we indicated earlier. Even worse, the price of agricultural commodities such as corn, oats, and wheat dropped precipitously, overwhelming many American farmers with debts to pay. This conspiracy was one of the most notorious scandals in the presidency of Ulysses S. Grant, who, though not personally known to be corrupt, gained a reputation for being surrounded by thieving scoundrels. Finally, the conspiracy led to more calls for the federal government to regulate financial markets. And this brings an end to our brief examination of the Black Friday gold conspiracy of 1869.